Greetings, my dear students. Fundamental analysis includes three steps: economic analysis, industry analysis, and company analysis. In the previous two sessions, we have discussed about economic analysis and industry analysis, and today let's discuss about company analysis. After economic analysis and industry analysis, which means the investors can shortlist the companies for our investment. From the shortlisted companies, the investors may analyze the resources and capacities of each companies. For this company analysis, the important factors to be considered are: first one is business plan, then market share, growth of sales, competitive edge, management, and financial analysis. So these are the major important factors to be considered while company analysis. Okay, and the first factor is business plan. The business plan, model, or concept is the basis upon which all other things are built. If the plan, model, or concept are not good, there is little hope for the success of the business. So while investing in a business, there may be lots of questions in the minds of investors with regard to the success of the firm. If the business has plans, then the investors can choose that investment for their investment. Okay. And the second factor to be considered is market share. It is necessary to consider the market share of the company in which investors are going to invest. If the market share is high, the company would be able to meet the competition successfully. It may be difficult for the small companies to survive in the future. So, an investor should consider market share of the firm also while selecting a company to invest. Okay. And the third factor to be considered is growth of sales. An investor must consider the growth of sales before taking an investment decision. A leading company of today may turn out to be a bad company in the future unless there is a steady growth rate in sales. Okay. Investors normally prefer stocks which have adequate growth in sales, and the stability in growth rate and stable revenue are also considered while selecting a company for investment. Okay, and the next point is competitive edge. Every industry is composed of many individual firms, and each individual firm is producing similar goods and services. Competition will be there. Naturally, some will become leaders, and large companies with good products and efficient management are capable to meet and succeed competition. Okay, so we can choose such firms for our investment. And the next point is management. In order to execute a business plan, a company requires top quality management. Investors can understand the strengths and weaknesses of the firm by analyzing their management capacities to an extent. Okay, sometimes best planned dynamic firm may suffer loss by bad management, and sometimes a strong management may bring extraordinary success to a firm which is in maturity stage. Okay, so while selecting a company for investment, we need to analyze their management also. And the last factor to be considered is financial analysis. An investor can rank the companies on the basis of financial analysis. That means it is the final step to fundamental analysis process. It is evaluating the financial statements to determine the value of that firm, and many techniques such as financial ratios like current ratio, asset test ratio, gross profit ratio, etc., and techniques like cash flow statement and fund flow statement can be used for this purpose. Okay, so after this, the last step of fundamental analysis is to decide whether we need to invest in which company. That is the final step of fundamental analysis. That means finally the investor need to select or decide the apt company for his investment. Okay, thank you.